Thank you, Scott, for that great overview of global economics and where we are on a macro level. Now we're going to move to this discussion on shaping the future GCC economies in transition. It's a privilege to be joined by two distinguished experts, Dr. Merza Hasan and Dr. Nasser Saidi, as we explore the profound transformation underway across the GCC economies. The Gulf region has long been a pillar of global economic stability, leveraging its energy wealth to drive growth and development. However, as we stand at a critical juncture, new challenges and opportunities are emerging. The transition towards more diversified, knowledge-driven economies is no longer just an ambition, it's an urgent necessity. Today, we'll examine how governments and businesses are navigating this shift while balancing fiscal sustainability, investment priorities, and economic resilience. We'll discuss the role of monetary policy and capital markets in fueling sustainable growth, the impact of demographic shifts on human capital and labor markets, and how the GCC can mitigate global uncertainties while maintaining its position as an economic powerhouse. Importantly, we will also explore the effectiveness of current diversification strategies and whether the region is doing enough to accelerate the transition beyond hydrocarbons. With your deep expertise, we look forward to a thoughtful conversation. Thank you. With that, GCC economies have experienced strong cyclical growth, but they also face strong headwinds, such as softening oil prices and rising fiscal dependence on energy reserves. Given these challenges, how can the region sustain long-term non-oil growth beyond cyclical upturns? What structural reforms are needed to ensure economic resilience? And how do you assess the effectiveness of current diversification strategies in GCC countries? That's a mouthful, Stu.
No, thank you, Abdullah. And let me start by thanking Kamco Invest and Burgan Bank for inviting us. Actually, this is a very crucial topic. We started with Scott, showed the global picture, which is honestly is not bad, but still need to be examined in the future. In addition to that, we have the GCC economy. Honestly, there is a new development model happening at the GCC. This is new, unprecedented, and need to be looked at it deeply. Now, this economic growth and the driver of the growth in the GCC, because everyone now is rushing, into the vision and reform in order to get the maximum out of their vision and also diversifying their economy. Now, in my opinion, this driver of the growth, Abdullah, in the GCC is going at a good rate, but we need also to step down and to evaluate, because we are spending a lot of money coming from the sovereign fund and debt in order to fuel that new market and the new change and diversification. And that needs to be looked at it in a way that's how much these are being impacted in terms of the return and the revenue we are getting from that. It's needed at the beginning. We need to invest. We need to create the market. We need to create the dynamic. But yet, we need also to evaluate it in order to get the maximum benefit out of it. Now, the GCC, I can put it in the three pockets. One, which is they are really accelerating at a good rate. The second one, which is really they are doing nicely, but at a different rate. And others, which is really trying to catch up with the vision and trying to do something. But we need to unify that so you can see the benefit. If we can, as a GCC, those who's really going fast, really to energize and to pull with them, those who's really going at the lower rate, that's going to be the maximum benefit for the region as a block. So that's one thing we need to say. Now, yes, whatever we are seeing on the growth model and the diversification on the driver of the growth, it's all fueled by the hydrocarbon. Yes, the non-hydrocarbon growth is increasing, but at really lower rate as what we expected it to be. So that's something which we need the oil revenue in order to fuel the growth which is in non-oil. And that's which is not going to the rate we are wanted to be in. So that's something needs also to be evaluated. Now, where the oil market and the price gonna go, this is all depend between the production and the demand, and this formula need to be updated frequently. But our expectation within the 25 and 26, we will settle on the low 70 and high 60. But when you look at the break-even of many fiscal economy of the GCC, that's going to put them in a bit challenging when it comes to the fiscal side. Then again, we're going to go to tap into our sovereign fund. We're going to go to the debt market in order to fuel the non-oil growth. So looking at the oil market, it's extremely important. And Scott mentioned about what's happening now in this trade war and what is the impact on the oil. We are not seeing the impact is high now because still there is no link. But we don't know in the future where this is going to go under this, what we call it, an economic war, which is going to start it by the trade war. And honestly, I will be honest, those who really fought for the globalization as the way forward for the global growth and taking people, especially in the emerging market, out of poverty, now really this model being contested. And we are going more into regionalization and localization. And what this new model going to bring with it, to be bad or good, still we don't know and need to be evaluated. Nobody can deny that a country like China took 740 million people out of poverty in 15 years. Nobody did it. This is all because of the globalization and opening up the economy and removing all these restrictions. If you go to the Africa, many of the African countries, they put this industrialization policy, they put these manufacturing policies, and they moved into it. And nicely they borrowed and managed their debt really in a smart way. And yet now this is going to be whole impacted by this, what we call it, the economical war. We are coming to a new era, need to be tested, but also what we are seeing, and this is, Abdullah, my worries, now you're going to see now and I don't know if Dr. Nasser agree on this with me, there is a de-link going to be from certain economy and going to be linked to other economy. So that's dynamic of alliance, which we are seeing on the 70s, 80s, 90s, 2000, is going to be disrupted completely. So we are coming in a disruption. Maybe it's good for some countries, maybe bad for the other countries, but that disruption itself is going to put us in a new market. And that's market where we need really to look into it. For example, we are talking about oil. Our revenue is coming from the oil. Our diversification is coming from the oil revenue. Now, what we are seeing now, there's a lot of GCC countries, they are not worried about the supply more than investing on the demand and creating that demand in order to get the supply into the demand. That's a new model. We are seeing it lately in the last 5 years. And this is all I can say, positive things happening in the market, which really needs to be looked at it and also to be invested on it.
Thank you. Right. Thank you.
First of all, thank you very much for inviting me. Thank Kamco and Burgan Bank. It's a pleasure to be with you. So I'm going to build a little bit on what Dr. Mirza was saying. We need to go back a little bit in history first, because this is a period both of growth, but I think the main impact is going to be transformation. This is what we need to be focusing on. The old idea is that you have cyclical growth with oil prices taking you up and down, I think is beyond us. If you look at pre-COVID, the period up to pre-COVID, we were driven by the demographics. We have young populations, they're spending. They have housing, education, etc. Then we build the infrastructure to support that. And the opening up of the Gulf economies was very important in terms of sustaining that economic growth, and also brought in entrepreneurship and human capital. But then, if you look at the diversification, which is critical, because you cannot continue being highly dependent on oil, and we'll come back to that in a second. So you have to diversify. How did we diversify? We started going into services, and in particular, if I look at UAE and Bahrain and others, a lot of focus on trade and tourism. It served us extremely well. And then COVID hit. When COVID hit, it hit precisely those sectors where we had opened up and liberalized. Trade, tourism, etc. And we lost all the investment. So policymakers went back to the drawing board. What do I need to do differently? And this is the period we're in right now. And it's critical, I think, to understand that this is a period of transformation. We have increased digitalization of economies that we need to focus on. AI can be perturbing, affecting all our activities. You've got the geopolitical risks. The regional landscape has changed in terms of what politics are and how they govern the region. But let's focus a little bit on diversification, because I think it's critical. When you think of diversification, you need to think of three pillars or three elements of diversification. One is the usual one, which is trade diversification. Do we produce anything other than oil, and do we export it? That's one area. But it's not just if you produce that. You need to look at value added. You need to look at product complexity. Are we going into new areas and new activities that will allow us to integrate into global supply chains? That is still ongoing. So trade diversification is critical, but it cannot be achieved unless you have two other diversifications. One is output diversification. That is, do you have a set of activities that allow you to diversify your output? So you've got the oil sector and related to that, and then you have the non-oil sector. The non-oil sector is going to be critical for driving growth and creating jobs. In the GCC countries, including Kuwait and all the others, we have very young populations. 60% of the population is nearly below 30 years of age. Where are we going to be creating jobs for them? You cannot create jobs for them in the oil sector. The oil sector is highly capital intensive. We have to look at the non-oil sector. And therefore, diversifying output and activities is going to be critical moving forward. But the third pillar is extremely important. You have to diversify government revenue, because a good part of the non-oil sector is also dependent on government spending. If you don't diversify your revenue, then every time the oil price fluctuates, it gets hit, you get hit on the revenue, and it increases the cyclicality. So when oil prices are high, you tend to spend more, you go into infrastructure projects and the rest, and then that booms the economy. At the same time, when prices decline, you cut down spending, and that means boom-bust scenarios. We have to end that. We have to end that. And the way to end that is to diversify revenue. How do you diversify revenue? You have to look at things like VAT, sales taxes, corporate taxation. I know this is not really the sort of thing you want to hear, but it's the thing that you need to hear. Because unless we diversify revenue, governments are going to be highly susceptible to volatility of oil prices. So it has to be put on the policy agenda. Already we've seen Saudi, UAE going for VAT. Corporate taxation is there. We're being strongly influenced by OECD and others for evading taxes through our free zones and other. So 15% taxation for multinationals is also going to be at our doorstep. But the most important thing, I think, is that focus on that in terms of the three elements of diversification. Now, if I look at how diversified the economies of the region are, there are big discrepancies between that. On average, it's 15%. The non-oil sector represents about 50% of the economies of the region. However, once you go to Saudi Arabia, and in particular the UAE, UAE now has 75% of its economy, which is non-oil. So they've achieved diversification. If I look at Dubai, and you might tell me, well, Dubai is not really, but it is there, it is visible. Oil sector only represents 5%. So 95% of activities are now non-oil. So what sort of structural transformation do we need moving forward? You have to work on fiscal policy, diversify. You have to do something about trade. And when I talk about trade, It means a lot of trade agreements we have to open up to the rest of the world. The GCC only has 3 FTAs, free trade agreements. We don't have one with China, and yet it is our biggest trade partner. If you look at the past 25 years, our main trade activity and economic activity has shifted towards Asia. It's no longer Europe and the United States. I don't care what happens in Europe and the United States. It might matter for the overall oil market, but my main client today is Asia. It is China, Korea, Japan. So it is in my interest to start developing trade agreements with those countries. A free trade agreement has been under negotiation with China for the past 25 years, or 20 years. 20 years we've been trying to negotiate a free trade agreement with China. Now, you'll tell me about sensitivities with the United States, etc., particularly at this juncture, but nevertheless, we need to look at our own interests. And I believe it is in our interests, in the GCC in particular, let alone the rest of the region, to have a free trade agreement at GCC level with India as well as China. That is an orientation. So that, I think, is very important. And once you do that, and I want to come back to what was being discussed in the previous session, the United States is trying to contain the growth of China, both in terms of its impact on the world economy. Today, if you measure it at PPP, China is the biggest economy in the world. At current exchange rates, maybe a bit lower, but those are the 2 superpowers. But China is more important in terms of trade than ever. So if there is a trade war and a chip war, a tech war, then what's going to happen? China is going to find that they want to divert their trade away from Europe and the United States because of tariffs. Where do they go? They're going to go to other regions of the world, including into the Middle East and GCC, into Africa, Asia, and Latin America. So they will integrate those economies into Chinese supply chains. This, to me, is very positive for us, because it'll mean that a lot of trade and investment will get diverted away from Europe and the United States towards our part of the world. So from that point of view, I'm optimistic. So just on one point, because I think I want to strike a note of optimism, because if you listen to what Trump and everybody else is saying, you're saying, Allahu a'lam shu haysir fina. And I think there are some positive things. And I think the main thing is that we can emerge in the GCC as what I call middle powers. We've achieved already soft power. We've opened up, we've liberalized, we've got the special economic zones and the free zones. So we've achieved soft power. Now, if the 2 blocks in the world start separating, we can emerge in the middle as what I call middle powers. So focus on those 3. Think of the structural changes that you need, the reforms that are required, and then I think I'm very positive in terms of growth, but it has to come from the non-oil sector. And just one quick one. We need to think about non-fossil fuels. The big thing that we have, which nobody else has in the world, is we have renewable energy. We can be the global hub for renewable energy, solar, and all the activities related to renewable energy. And at the same time, you can be the hub, global hub for fossil fuel energy. Nobody else has that. So increase the investment in the green economy, let it grow, it'll create jobs, and at the same time, put you at a global level as a middle power.
Thank you for that, and especially thinking about diversification requires investment, wise fiscal policy, and government spending in the right ways, and especially as a key driver of economic transformation, the GCC, governments invest heavily in priority sectors, as you rightly pointed a few of them. However, rising expenditures and the need for long-term sustainability present a difficult balancing act. How can policymakers maintain fiscal stability while making the necessary investments in economic diversification? Should we expect to see more debt issuance and sovereign wealth fund deployment, as you mentioned as well, Dr. Hasan, to support this growth? How sustainable is this strategy?
Now, before I will go to your question, Abdullah, let me just start and give you some numbers. By 2050, the Arab region or the Middle East needs to create 450 million jobs because of the youth demography. And honestly, we are not even close 3% to that number now in order to go into that 450 million jobs creation. That's going to create a lot of instability in the region if we didn't really have these driver of growth from the first topic in order an economy which can create more jobs. But also, many of the youth in the Arab countries becoming a project of migration rather than to build up the hope and build up the country. So that's also these challenges coming in terms of that growth and related to the job market. Definitely, I agree with Nasser. Everybody wants to go to the east, departing from the north, because the action is happening on the east. So this is where we find in this dynamic, people wants to go more into the east. China, they have, I'm not worried about growth in China. China, they have a lot of, a space in order to really grow bigger, because still the model of domestic demand is not being yet mature and is not being picked to the potential where to be in like an advanced economy. So China, if they can boost, honestly, just a little in their local demands and domestic demand, the growth gonna go really at the higher rate when it comes to that one. Now on the fiscal space, that's really the big elephant in the room. Now, according to the oil price, many of this fiscal surplus is narrowing. We are not seeing it's becoming big. And that's why we are going to the debt market, tapping on the sovereign fund to fuel the diversification and financing, all these government vision and reform agenda. We have a lot of room when it comes to the fiscal. I'm not going to talk about the sovereign fund. It's maybe important to just tap into it to create market and to create revenue. But when it comes to the fiscal, GCC needs to open, and some of them, they opened that and accepted it. Like in Saudi Arabia, they accepted 15% VAT. So that's becoming now, nobody talks about it. Yes, it has some implication on the inflation, but overall that have been accepted. We have a lot of room now on the taxation as a revenue. We have a VAT, we have an income tax, we have a property tax, we have corporate tax. So we have that room which is not being tapped to it, especially in my country. We are not being tapping to that. So we have that space of revenue getting to the government. We need also to look into the subsidy. We need a huge subsidy reform. And by subsidy reform, honestly, we need to rewrite our social contract. That's something where a good amount of the GCC, they are putting it on the table, what we call it the relation between the government and the citizen. That's under the subsidy reform, we need to look at it. And especially when we talk about the energy, the electricity sector and the water. This is the big elephant in the room. In Kuwait, for example, we are paying 3.7 billion Kuwaiti dinar just to subsidize water and electricity. That's a huge burden on the government. But also the inefficiency, rationale, consumer behavior, all these going to be impacted by the subsidy. Many of the reports from the IMF and the World Bank, they called it's the disease, which needs to be really treated. Otherwise, that's going to go out of the control. What is really worrying me about the fiscal space, in some of the countries of the GCC, if you look at if the demand of the electricity every year around 6%, and we need to produce more energy by burning more oil, that's going to cut from your revenue. For example, in Kuwait, we are around, I think, about 470,000 barrels a day to produce electricity and water. And the growth on that sector is around 6% annually. And we have a shortage. Then you have the climate change, the excessive of the heat, the demand on the cooling, 80% of the electricity going for the cooling, especially in 7 months of the year. That's going to cut your revenue. Then that's also going to cut your space of the fiscal. So you need to introduce another measures where you can go and try, to finance the government. Now, the public sector, honestly, this is where many countries, when they start their reform agenda, they started to look at their public sector and the size of the public sector and the wage bill when it comes to the public sector. So the public sector, honestly, it's too big and need to be shrinking. I say that me as a citizen, I have too much government in my life. I want it to be less. And Jefferson said, too much government, no government. So that's why privatization, moving into the model of state-owned enterprises, these are making, the government less. And it cannot be the government is going to be the investor, the operator, the regulator, and the one who evaluate themselves. Right. That's not going to get us anywhere. We want them to be an enabler and keep the rest, for the dynamic of the market. And this is where you're going to really have the fiscal under control. You're going to increase your revenue. Because honestly, for me today, many of the GCC countries, they don't have no challenge because they have so many things they can do in their economy to get more revenue, and which is we didn't do. For example, if I introduce 5% VAT into Kuwait, that's going to get me almost like 1.7 billion Kuwaiti dinar. That's already going to take almost like 30% of the deficit I have. So we have that room. We have these mechanisms and the dynamic, and it's not going to be much impacted the citizen. They will not going to see it. That's not going to be like a burning issue where you see the inflation going to go up. Maybe in the first couple of months, but later on it will stabilize. This is exactly what happened in many countries. They went really over that number and stabilized their economy. That's one thing. So subsidy, we need to look at it. We need to look at into the taxation and the efficiency and rationalization, many of our spending, and creating market. These are fundamental for the fiscal stability. Honestly, still this model of the GCC where the interest rate is acceptable, the debt to the GDP ratio is still not high, and the oil price is still reasonable. So I'm not worried about now when it comes into the fiscal. But later on, with all what's happening now globally, what's going to be the impact? Still, I don't know. But definitely, the fluctuation on the physical side, because we are relying on the single commodity, is going to be very vulnerable. And that's why we need so many buffers we create. And one of the buffers, we need to create it to really mitigate all these changes on the fiscal and going to the deficit at different rate. It's all about, the taxation and subsidy reform.
So now you understand, after listening to Mirza, why economists are not really the favorites. So. But the truth is, as I fully agree, the truth is we need to change the social contract, the relationship between our governments, the state, and our citizens. The issue of subsidies is critical. The numbers are staggering. If I take Kuwait, 12% of GDP is going into subsidies for fuel, oil, water, and the like. That is not sustainable. That has to change. Introducing pricing for water and electricity has to be on the agenda. If you do that, you free up resources for other uses, for health, education, and the rest. I think that is a critical one. But there is also another aspect beyond the revenue one, which we tend to neglect, which is governments in our region own a lot of commercial assets, public commercial assets. And if you use them and you run them efficiently, you can earn a lot of revenue from them. So let me give some examples of that. So what can be public commercial assets? You look at, and I'll take the example of Dubai. I have to take the example of Dubai. Look at DIWA. the Dubai Electricity and Water Authority. It is a profitable institution because it prices electricity and water according to market economics. Emirates Airlines is a highly profitable airline, gives enormous revenue to government. The same is true for introducing tolls on the roads. So how you manage your public assets can provide a lot of income to government. So the first thing you have to do is to find out what are the commercial assets, what is the state owned in terms of land, property, companies, and all the rest. So let's take the example of Temasek in Singapore. So Temasek in Singapore is the sovereign wealth fund, but it also manages a lot of public utilities, transport, etc. On average, the return on their investments, on average, is 13%. 13% per annum. And a good part of it then goes to the state. So revenue diversification, taxation, moving subsidies is critical. Because if you remove subsidies, and to come back to what Mirza was saying, I need to encourage the renewable energy sector. Why should I be using diesel and fuel to keep us cool and to transport us? Go towards solar power. Allah an'am alayna. We are a region of the world which has the highest solar irradiance in the world. So use solar power. We are using it also, use it for desalination instead of using diesel for desalination. No, we need the water. But two things. Energy transition is on us. The rest of the world is going to be reducing how much oil and gas they use to produce a unit of GDP. So downwards impact on demand for oil. Second, climate change is upon us. Temperatures. I was here last summer. Temperatures were running at 52 degrees. So if you went outside, the tarmac started melting. Climate change is upon us in terms of higher temperatures, desertification, and also leading to migration of people because agriculture and the rest cannot survive. So we need to address the issue of climate risk mitigation, and we need to adapt to climate change. That means a big opportunity, in fact, for our capital markets to finance the energy transition, go into solar, climate technologies like district cooling, desalination, desert agriculture, and all the rest. Those are enormous opportunities. And at the same time, if you do that, then you're achieving increased diversification. And the last challenge, which we didn't discuss yet, is technological change. We talk about AI. AI is going to make enormous changes in terms of demand for labor across the GCC countries. If I look at some of the forecasts, there's a lot of hype around AI. But if I look at some of the forecasts, they're saying that if I implement AI into government across all the sectors, I could increase GDP by 30% from now to 2030 in countries like the UAE. So the changes that can happen, espouse technological change, you invest into robotics, you invest into AI, requires training our people. Education is going to be critical. Mirza, you talked about the jobs, but not only do we need to create the jobs, they need to be educated in new technologies. They need to understand how to code, etc. So educational curricula need to be completely transformed. So we're at the beginning of a long road of transformation. But I think the main message is that we have the natural resources, we have the financial resources, we know what needs to be done. And I think you can only be but optimistic if you understand what the challenges is and you put a roadmap to address those challenges. So focus on that, and in particular, I think, move out of the oil sector and start thinking about renewable energy. The oil sector can take care of itself. What you need is renewable energy climate technologies, AI, and all the rest, to provide a vision for our youth. Because otherwise, where do they create the jobs? Otherwise, our youth are just going to migrate and leave. We educate them, and then they leave our countries. We need to maintain them here.
Can I add, Abdullah, one thing? Nasser mentioned that, and I think when I said we have room for more collecting revenue, one thing is about, the public assets management.
Yeah.
Our calculation in Kuwait, if we really managed our public assets to the level where others is managing it, we're going to generate around like 8%.
8% of GDP.
Of GDP. That's a huge
Without
money.
taxes.
I will close taxes.
Without taxes.
Just manage your assets.
I will close my deficit on just managing this. But even managing to close the deficit. In addition to that, I will create more opportunity. Because the assets has been managed in the different perspective than the way I'm managing it now. Now, honestly, this accounting system of public management assets, it's extremely important. We need to look at it and put it on the table. Look at Mumtalakat in Bahrain, how much generated, income for the Bahraini when it comes to the deficit. Other Singapore, but not also managing and getting revenue, but also opening up more opportunity for the individuals to do that. One thing Nasser mentioned about I've been in 10 years in negotiating of climate change and energy transition from the Paris Agreement and all these things. I was there on the negotiation. I never saw in this climate change agenda, and Nasser, correct me, how much they are demonizing, the oil sector. And today, if you go to the global survey, the youth from below 30, what is the number one worries they have now? It's all about climate. So they're going to become, within 10 years or within 5 years, they will become a politician in their countries. If this is what is the most worry they have, it's all about climate and demonizing. And they seeing this is the only product which really putting all this pollution and, destroying all this environment, then that's going to be a huge risk which is coming under, the climate change. Now we are talking about energy transition, and that's something which really we need to look at it. Nasser mentioned, today, if you look at Saudi Arabia and UAE, they are buying kilowatt solar at 1.4 cent. If I have that option, I don't need to subsidize electricity. So that's something which also a revenue. I'm not talking, today Saudi Arabia, they are not talking about solar farms. They are talking about solar forest.
Yeah.
It's a huge potential.
Yeah.
Because we've been like 70 years on energy business, we need also to be on that business to create that market and to export of the energy.
These are exportable technologies. Yeah. The technology that we have for district cooling, desalination, and using solar power, for example, for data centers, these are all exportable technologies. Okay. So forget the diesel and fuel, sell it to the rest of the world, and use solar power and climate tech to really transform the economy. And this is where we can create the jobs. Mentioned again the public management of public assets. Think of the ports and airports and how much revenue they can generate for government. We're missing out on all that. And this is the area where you can bring in the private sector. I know we want. This is the area where you can bring in the private sector. I was about to ask. This is where you can grow your capital markets. IPOs are one bit, but really the transformation of the public sector could really make your capital markets boom.
On that point, and even as you referred earlier to the demographic shift, youth, needs for job creation, etc., this requires a shift from capital-driven growth to productivity-led expansion. With a young and growing workforce, governments and business, how can they drive innovation, increase productivity, and build globally competitive industries, as you rightly mentioned, some of this exportable technology, but while still including the private sector? Is the private sector participating enough in human capital development Does the burden fall too heavily on government-led initiatives?
The answer is no. But we want to come back to total factor productivity. You can increase growth by investing more, having more people to work, but the real difference is total factor productivity. And that comes mainly from research and development. So let me give you some numbers. On average in the world, they spend about 2% of GDP on R&D. OECD countries, 2.7. And how much do we in our region? 0.5% of GDP goes into R&D. But R&D is the main driver of innovation and change. But we're not spending on R&D. We waste spending, including public spending. So if you want to bring in the private sector, start looking at areas where you've got R&D, where you can make a difference, digitalization, etc. If you look at the calculations that were made, the larger the state footprint, it has a negative impact on total factor productivity. What has a positive impact on total factor productivity is macroeconomic stability, digitalization, and research and development. I mean, I think the roadmap, I think, is very clear. But
Yeah.
No, in that one, Abdullah, because you open up the issue of the human capital. You cannot move to any economy. If you want to create one, you cannot move without, you don't have a good human capital, honestly. You need the human capital in order to move and in order to create, this, let's say, the market. I remember at the World Bank during my time, we want to do a lot of things for our countries, which we serve. And they have a huge development agenda from, infrastructure, poverty, immortality, labor issues, So there is so many issues they have. But we brought really the top brains globally, and we said, if we want to help this country, where should we start? I know there is so many priorities, competing priorities, but which one is going to be really, we are getting huge multipliers on it when it comes to their economy and their diversification and change. All of them, they came and they said, you need to invest on the human capital.
of course,
Today we have a wealth underground. Can we really transfer that wealth over ground? In Kuwait, the only wealth I have is the human capital, honestly. If I spend on the human capital, that's going to be really transformational for me. Now, when I talk about human capital, it's not about education. It's about education and health. Today, in many, I'm not going to name countries, we have almost like, out of 5 children, there is half child is stunted, which his brain capacity is lower than his peer by 40%. Why? Because of obesity, malnutrition, diabetic, all these things, and the air quality. This is all impacting. So when I talk about human capital, because there is cognitive is extremely important in the way. But also within 10 years, I will tell you, within 10 years, there is a paradigm shift in learning. I remember, we had a retreat with a top brain who are really doing these future education. They told us, student going to stay in 4-year university is going to finish. That's not going to happen anymore. Because that student, when he reach year 4, what he learned in year 1 is going to be obsolete. Mm-hmm. Some of them, they said, these big universities, I'm not going to name universities, these big universities, which the dream of the kids to go into it, they will become a museum that's produce good quality people, highest Nobel Prize winner. So there is a paradigm shift in the knowledge. And that's honestly, because we are late, let's not fix an old system with the old model, with the old tools. Let's leapfrog and really go where people are thinking now in terms of the education, where they're going to go. I will tell you, many of our countries, even also the advanced economy, they are not ready to take this economy is coming within 10 years, and we don't have generation ready to go and take that economy. Honestly, we're going to be behind when it comes to the human capital.
No, we're behind on time as
we're
well.
We're out
maybe
of
we'll
time,
live-
but just to tell
Yes,
everybody,
thank you so much.
if you go to China today and you go to kindergarten, they're starting to teach their children in kindergarten how to code.
Wow.
They learn about algorithms. So should you be surprised that AI is booming in China? No. I believe they're ahead of the United States.
Of course.
So if you want to prepare for a digital future where AI and technological change is going to be important, then we need to revise all our curriculum, starting from kindergarten.
I think that's a very hopeful and positive note. Much more hopeful and positive than increasing taxes. But I thank you for your time and thank you for your participation. And look forward to continuing this conversation of the panel. Thank you so much.
Thank you.
Thank you.